Keep the focus then on earnings. Tech Solutions is in focus, and this on the back of the second quarter numbers. Profits saw a jump of about 65%, and revenue saw an uptick of about 39% as well. Let's bring in HR Srinivasan, then the Managing Director and Vice Chairman of the company, to tell us whether or not this kind of growth momentum can be expected to continue going ahead. Thanks very much for joining us on the show, sir. It looks like it's been a good quarter for your company. Could you take us through what worked for you in the quarter gone by?
Yeah, I think it's been an amazing quarter for us, and it's quite in line with the expectation. We've given a guidance that we'll do an annual growth rate of organic growth rate of between 23 and 24%. I think we're well on track to perform that and hopefully outperform that. The margins have come much stronger. The operating EBITDA, we've had a 600 basis point jump in the operating EBITDA. This is both on the basis of scale and some, of course, advantage of the forex that has gone by. So we hope to sustain this momentum for the year.
All right. In fact, a 20+% margin figure. I understand you're saying you hope to sustain it, but can that be done if we talk about both the remaining quarters of the year?
Yeah, I think actually over the next 4 quarters, we would expect the margin to go up. So while we've done 600 basis points, ideally we should expect that over the next 3-4 quarters, we should be able to add another 600 to 800 basis points to the margin figure from here.
All right. Expect that number to continue increasing going ahead from here. What led to the sort of fall that we've seen in revenues for the supply chain segment?
So supply chain, we had actually been defocusing on it, and during the quarter we also managed to sell our US portion of the supply chain business. So we want to be a full life sciences company, and this is quite in line with what the company expects and had guided.
All right. So that's then a strategic decision on the part of the company, is it? Mr. Srinivasan, all right, let me ask you about, your regulatory and safety segment in the life sciences space. What kind of traction are you seeing on that front, if you can hear me?
Yes, I can. I think overall the life sciences segment continues to be very buoyant, and the regulatory and safety aspects are key. Today they account for about 65% of our total life science revenues and have been growing very steadily. The clinical accounts for about 35% of our revenues. However, over the next 2 years, we'd expect clinical to grow at an accelerated pace, and regulatory and safety being a derived demand on the back of the clinical services that we provide. So overall, we expect the company to continue this growth trajectory over the next few years. And the order book stands at a very healthy 227 million. Which is about 16% up, and that augurs extremely good for the future quarters.
All right. In fact, in terms of your order book, then what would be the number that you're looking at for full year fiscal 19? And also, if you could give us a sense of the mix in terms of the various segments that are contributing to it.
So the order book at this point of time, the mix is about 50% clinical and 50% is the reg and safety business. And as see, for the first half of the year, we are at about 983 crores, which is certainly a very strong growth rate from the previous year. We expect this momentum to continue in the next 2 quarters as well.
Okay. Have we seen any major client addition or departure in the quarter gone by that you can tell us about?
No, there is no departure. We've had a strong expansion in the existing client relationships that we have, including a multi-million, multi-year engagement with one of the top 5 pharma companies in the world.
Okay. So no major departures then in either of the segments, life sciences or supply chain?
The supply chain, like I told you, we have actually sold our US business, so we will be taking the balance of the business as well, and we'll focus on being 100% life sciences company.
All right, fair enough. Point taken then. In just a word on the inorganic side of things, do you have any acquisitions that you have planned or any opportunities that you're looking at in particular?
So we are certainly looking at opportunities, and at this point of time, I won't say there is anything in the transaction stage.
All right. Just a last question then, sir. You have mentioned that the 23 to 24% is the kind of annual growth rate that you're looking at. Where do you see the overall growth drivers coming from, and overall, what is the picture that you are looking at for fiscal 19?
The overall growth drivers are really, in terms of markets, it's going to be led by the U.S. market, followed by Asia Pacific, and then Europe, in that order. In terms of therapeutic areas, I think oncology and central nervous system will be very strong in terms of growth opportunities. So that's what I would call as the growth drivers. And I think we'll comfortably meet the guidance that we've given for fiscal 19.
All right. We'll meet the guidance that has been put in place for fiscal 19 as well. Thanks very much. Appreciate your time. That's HR Srinivasan, Managing Director and Vice Chairman at Take Solutions. A strong quarter, expecting the kind of margin growth that we've seen in particular to continue for the next 4 quarters as well. But before we wrap up the